and then I will also email them to Roland at Picpa to make sure that you get your CPE credit. If you don't respond to the 3 questions, you will not be able to get CPE credit. This will qualify as A&A CPE credit for those of you that are CPAs that are reporting. So we've got the issues that affect us are as follows. There are several areas of accounting that require disclosures. And we'll talk about those. There are 3 in particular, but all 3 of them require similar disclosures. So we'll be putting one disclosure together that covers all of them. We want to consider other items on the financial statements that may be affected. For example, well, no, I'll give you the example in a few minutes. We talked about going concern, and I'll give you some guidelines there. We'll talk about other issues, and if we have time, and I think we'll have a little bit of time, we'll talk about other ways in which you might consider helping your clients. So the 3 areas, and by the way, if you are the reporting entity, I'll look at it from both the standpoint of the reporting entity and the independent CPA that might be performing an audit review compilation on those. So the areas that are affected, we've got risks and uncertainties that must be disclosed, and that is Accounting Standards Codification Topic 275. We've got contingencies, because we don't know what's going to happen in the future, making this a contingent liability. And so that's ASC Topic 450. And if this occurred after your year end, or if there were activities that occurred after year end related to it, then those are considered subsequent events. In terms of some specific disclosures, and before I get into that, let me spend a minute or 2 on subsequent events. When something occurs that affects an entity, either your entity or your client's entity, after your year end, that is a subsequent event that must be disclosed if your financial statements have not yet been issued. There are 2 types. One type, type 1, is when something on your balance sheet needs to be adjusted and you find out about it because of a subsequent event. So let's say you've got a receivable, the customer declares bankruptcy in January, so it's after your year end, but if they declared bankruptcy in January, most likely they weren't liquid in December or November. So that would require you to write down the receivable because it's an event that indicates that an asset on the balance sheet was overstated. On the other hand, if your customer had a fire after the year and they became insolvent and couldn't pay you, that would be disclosed because the amount on the balance sheet is correct. So if you've got items that were affected by COVID-19 that are now overstated as a result, you might want to look back and see, were they overstated as of the balance sheet date, and adjust them accordingly as a subsequent event adjustment. The disclosures we'll be talking about. 275, and these are the 3 areas we were talking about, requires us to indicate that estimates that are included in the financial statements may not actually occur in the amounts that were reported. And so economic events may require revision and the results may be different than expected. When there's a loss contingency, and there will be some contingencies because we don't know what's going to happen to a lot of businesses as a result of COVID-19. If it is one that we are fairly certain it is considered probable that we will incur the loss, and we can estimate the amount, then we accrue and disclose it. If it's only reasonably possible, or if it can't be estimated, we will only disclose. And then, of course, if we've got subsequent events that do not affect the balances at year end, but do affect them after year end, those will be disclosed as well. The nature of the disclosures for all 3 areas is very much the same. And before we do that, I'm going to give you 1 minute to respond to this question. Please take a moment and do so. And put it on a piece of paper, polling question number 1, and indicate 1, 2, 3, or 4. I hope I've given you enough time. I'll leave it on for another 10 seconds or so to make sure. And by the way, I hope none of you selected alternative number 4. That would be not happy. Okay, So these are the things that we have to disclose. And required by all three of them, we have to disclose the nature of the event or circumstance that caused the risk or uncertainty, or the nature of the event or circumstance causing a contingency, or the nature of the event creating the subsequent event. So all three of these areas require us to discover the nature of what is causing the issue. All three of them require us to estimate the amount. And if we can estimate it, we do so. If we can only estimate a range, then we will accrue the minimum of the range and disclose the remainder. And if we can't disclose, if we can't estimate it, or we know it's the range is too wide, then we'll simply disclose that the amount cannot be determined at this time. And I'm seeing most of what is happening. This is an example of a disclosure that was for a client of CBiz, which is, as you know, well, as you may know, it's a large consolidated firm, many firms involved. And as you can see, it includes the information. The declaration of COVID-19 as a pandemic is the event that caused it. It talks about economic uncertainties that are likely to have a negative impact, but we could not estimate the amount of the impact on it at this time. So this meets the requirements, and it's a fairly simple disclosure. On the other hand, here's one that's a little bit longer. It's another client of CBiz, and they've decided to give a little bit more information about traffic, reduction of hours, and a few other things. I personally am reluctant to give any kind of detail in the disclosure unless I'm planning on a very long footnote, because if I disclose some items and there are other items that have a greater impact, it puts me in a vulnerable position. Why did I disclose one and not the other? So I would rather keep my disclosure very general and talk about the fact that COVID-19 will affect all operations of the entity rather than isolate specific ones. And that's just my own opinion. And here is another footnote that was provided by someone from the California Society of CPAs, who also provides continuing professional education and did a seminar on COVID. And you can see it talks about what caused it. It talks about the fact that it may adversely affect the business, and it gives a wide variety of areas that are affected and indicates that we don't have the ability to estimate the impact. And finally, here's a very long one. Now, this is from a publicly held company. It's from their 10K. So we would expect it to be a bit more detailed. And as you can see, it's a little bit more lengthy than the others, but it has the same basic information and also indicates that we're not in position to estimate the amount of the losses. So you can use one general footnote that incorporates all requirements as was done by those three examples I just showed you. I think it was actually 4. Okay, there may be additional disclosures related to specific financial statement elements. If you find that there are items where the valuation on your balance sheet is questionable, if there are estimates on your financial statements that may change as a result of COVID-19, then you want to look at the footnotes that you've written for those items and see if they may need modification or if there are additional disclosures that may be necessary. Now, this is a little bit off of COVID-19, but it's something that has worked very well for me because, as you may be aware, many people are critical of the footnotes that people write because sometimes they're too complex, they're hard to understand, they don't flow well. And I started doing something with my own staff when I was an audit partner of a CPA firm. Rather than have them look at the requirements and rather than have them look at last year's footnotes, I would ask them to look at the item that we're disclosing. I would remind them that an user of finance statements is always concerned about the nature, timing, and probability of future cash flows, that we need to make certain that any commitments that affect assets are reported. And I would tell them, write a paragraph that includes everything that you think a finance statement user would want to know about this item. And they write a very nice paragraph. It flows well. It's usually not too complex. It's not usually technical. And then when I compare that to the requirements in the disclosures, I usually find that either almost everything is covered and the items that are not covered are usually not material to that company, or the items that are not covered can be added very easily. I think you'll find your footnotes will look better. I think you'll find it easier to prepare them. And I think if you have staff, they will learn more by that process. I will leave it at that because I don't have time to go into detail on that, but maybe at some future time we'll talk about developing disclosures and do a whole session on it. Now, as far as preparing the disclosure, I always warn people, don't over disclose. When you give too much information, when your disclosures are too long, people will tend not to read them because they're too complex or not understood. You're better off giving some information that will be read and understood than all of the information that will be ignored. I've been an educator for most of my life, and there's an expression that you will hear among educators that's kind of silly and funny. They say, if you want someone to know something about your company, you put it in the financial statements. If you want very few people to know about it, you put it in the footnotes. And if you want no one to know about it, you put it in the accountant's report. And it tells you that users read the financial statements, some read the footnotes, and practically none of them pay attention to the report. Now, one of the things you want to be careful of when you're reading disclosure requirements in each subject area is that anytime you see something with the word should, it establishes a presumptively mandatory requirement. And if it's not included in your disclosure, you've got two choices. If you feel it's material or useful, you want to add it to your disclosure. If you feel it is not, make sure you have documented somewhere in your work papers, either your internal work papers if you're the reporting entity, or your engagement documentation if you're the independent CPA, indicating we are aware of the requirement and for these reasons determine it's not material to the users of these finance statements. Someone may disagree with you, but they cannot accuse you of not being aware of it. And this is very important when it comes to protecting yourself from liability. And what I like to do is, since so many of my clients are in similar businesses and have finance statements that look a lot alike, I look at some of the disclosure requirements, decide some of them are beyond the scope of what my clients need to do, and I establish a written firm policy as to what those disclosures that we will not be including are. And this gives me even further legal protection in case I ever am facing action on a finance statement I'm associated with. Again, takes a lot of time to talk about that. We'll do it at another time. Let's continue with COVID-19. But before we do, here is polling question number 2. And if you will just take a moment to read it, and again, on your piece of paper, polling question number 2, and then the number 1, 2, 3, or 4. And I don't think I need to remind you, but just in case, make sure you put your full first and last name on that paper if you want to make sure you get your CPE credit. Give you another 30 seconds. Hopefully I've given you enough time. I don't see anyone ranting and raving or raising their hands, and so I will assume that I did in fact give you enough time. So one of the other things you want to consider, look at your balance sheet, look at your income statement, look at your finance statements, and say, were any other items on those finance statements potentially affected by COVID-19 in a way that I might need to evaluate, change the information on the finance statements, or change the disclosure. So for example, you might have accounting estimates as far as uncollectible accounts, allowance for bad debts, and you might know that some of your customers, or be concerned that some of your customers are more adversely affected by COVID-19, so you may need to increase that allowance. You may have some operating assets, and if your revenue has been adversely affected, you might not recover all of your investment or remaining carrying value, in which case you might have to recognize an impairment. We've talked about loss contingencies. We may not have, there may be contracts on which we won't perform or other parties won't perform. When we have leases, If we included an estimate of variable consideration, such as a revenue that, a lease that requires additional rent based on revenues in excess of certain amounts, those estimates may change and it may require an adjustment there. And of course, revenue recognition as well. Estimates of costs may change and estimates of amount of revenue that will ultimately be collectible. And I'm only saying, look through your finance statements, make sure there is nothing else that will be affected. A very important area to talk about is going concern. As you are, I assume, aware, every company is required to evaluate whether there's substantial doubt about their ability to continue as a going concern every time they issue financial statements. With COVID-19, there are a lot of uncertainties. If your business or your client is considered an essential, if you provide an essential product or service, if your business had not been adversely affected by COVID-19, and some businesses have even expanded because of COVID-19, then you want to document that. You would indicate in your documentation that there is no going concern doubt, and there is nothing further that you need to do on your financial statements, although you may if you wish, and I'll talk about that in a moment. If, on the other hand, your client has been affected, if it does not have substantial reserves, and there is uncertainty as to whether it will be able to meet its obligations for 1 year from the date the financial statements are issued, if it's public, or available to be issued, if it's non-public, then you have a going concern issue. And keep in mind, we don't know how long this will last. There's still lingering effects. We don't know if when it ends, every client will be able to endure. Notice I say, what is the burn rate? How much are they spending per day if they generate no revenues? How much is their revenue going to be affected because they may not be able to provide everything? Raw materials may not be available, labor may not be available, and so on. And will those that do survive, that can last throughout this process, will they recover well enough to where they become going concerns at that point? There are a lot of issues you want to deal with. You want to look at it very carefully. And to protect yourself from legal liability, I would suggest that you take a fairly conservative view. Assume that customers and suppliers are going to be dealing with this as well, and they will affect your business. So, two possibilities here. The first is you identify that there is a potential problem, but you believe, or the client believes, that there is adequate business, adequate reserves for them to be able to survive it. They have plans for how they're going to overcome this, in which case they'll have one set of disclosures. If they don't have plans that will help them overcome it, or if you're not confident that they will overcome it, then there is another set of disclosures. Regardless of which way it goes, the disclosures will be the same to some extent. Either way, we will indicate, and I think I skipped where I wanted, we will indicate what conditions, it's on the right of this slide, what conditions caused the doubt. So this would be COVID-19. How management determined that it does create a problem, what factors you looked at, availability of staff, suppliers, customers, whatever. So why is your entity affected? And then, depending on the plans, if you're the client, or the client has adequate reserves or sufficient plans to overcome this doubt, then your disclosure will include a statement that says that management's plans to alleviate, no, let me revise that. It will describe the plans and indicate that they have alleviated the substantial doubt. If they do not alleviate it, it's going to help, but there's still doubt as to whether they will survive, then the disclosure will refer to the plans again, but instead of saying that they alleviated the doubt, they will say that they are intended to alleviate the doubt, and the users of the finance statements will make their own decision. Some of the things you want to consider, okay? We talked about going concern in general. If any of them are not met, if any of the disclosure requirements, those or any others that we talked about are not met, then you have a departure from the financial reporting framework and will issue an either, if it's an audit, a modified opinion, it might be a qualified, or depending on materiality, could even be a disclaimer of opinion. If all conditions are met, okay, if there is a going concern disclosure, you will probably want to put an emphasis of matter paragraph into your report, bringing attention to that disclosure. Now, really important issue, and that is if you use an emphasis of matter paragraph, that means the item is properly accounted for and properly disclosed in the financial statements, and you are just bringing attention to it. If it's not properly disclosed or accounted for, then you have a departure that is going to be dealt with quite differently. If management's plans are expected to alleviate the doubts, it is up to you as to whether you put an emphasis of matter paragraph in your report. However, if management plans are not expected to be effective, then the emphasis of matter paragraph is required. And as you probably know, an emphasis of matter paragraph goes after the opinion or after the conclusion in this particular circumstance. Now, some other issues. If you are assisting your client in dealing with COVID-19, helping them with budgeting, helping them with staffing, helping them make connections with other entities, you have to look at whether or not your independence has been impaired if you're going to be performing an attest service. So if you're going to be performing an audit, a review, or a compilation where you're not indicating a lack of independence, you want to make certain that the independence requirements are met when you are assisting the client in perhaps applying for COVID-19 relief. Some of your clients or some of your companies, I'm sure, acquired some of these PPP loans or the SBA, small business SBA loans that were made available. And if you assisted them with it, you want to make certain you have not impaired your independence. And also, you are looking at a wide variety of clients. I assume if you're in public accounting, some have prepared well for it, some have not. And so you're gaining knowledge and information, and you can develop what are best practices and help those clients that don't have the internal capability of doing it on their own. I see this as a great opportunity to provide value-added services for your business clients, because many of them will have to change the way they do business. One comment about that, by the way, if you have a client that requires an audit or one that requires a review that may require audits in the future, I would assume that if they do risk assessment as part of their internal control, practically no one considered the possibility of a global pandemic or something else that would adversely affect the global economy. This is a wake-up call. And in your risk assessment component of your internal controls, you want to make certain that you're prepared for what will happen if something bigger than all of us occurs that does affect us as well. Third polling question, and this is our last one. And if you would take a moment to do that, again, polling question number 3, indicate 1, 2, 3, or 4. Hope I've given you enough time. I will be interested in seeing how those answers come out. I joined the profession when I was 13. I went to work for a CPA firm at the age of 13 years, and I've been in the profession ever since. And so I've been at it for quite a while. I'll turn 72 this year. So that makes 59 years I've been an accountant, and I think that's pretty much long enough, don't you? Maybe I should look at an alternative career or something like that. So those are all of my formal remarks about COVID-19. I went quickly because I know we've got an awful lot to do today, but I welcome any questions or comments you may have. And I don't see any at this point, but please let me know if you've got any. And before I turn it over to you again, either Roland or Bradford, whoever's going to be taking it over for me, I do want to go back to one of the slides that I felt I dealt with a little bit too quickly, and that is the issue of independence. In 2016, US standards changed in relationship to independence. And up until December 31st of 2015, if you were performing an audit, review, or compilation for a client, and that client gave you a trial balance to which you made some adjustments that were expected, they never record their own depreciation or they never record their own bad debts, and you proposed adjustments that came up because of your engagement, and you prepared the finance statements, and you prepared the disclosures, and you performed your compilation, review, or audit, all of those services combined were considered to be one engagement covered by your audit, review, or compilation engagement letter. Effective January 1st of 2016 in the US, you may not audit, review, or compile a trial balance. You may only audit, review, or compile financial statements. If your client gives you anything other than financial statements, if you have to analyze accounts to propose adjustments, if you prepare the finance statements, if you propose the footnotes to the finance statements, you are performing a non-attest service for the client that has the potential of impairing your independence. And so you want to go to the Code of Professional Conduct. It talks about what to do when you're performing non-attest services. And there are 3 steps you'll need to perform to make sure that doing these things have not impaired your independence. Now, on the last slide, which I'm going to turn to right now, I've got my contact information. I'm much more better looking now, I think, but that's my own opinion. It's got my contact information. Don't be shy. If you've got any questions that relate to this or any of the things that I mentioned today, please feel free to send me an email. I do not get back to people quickly. I'm very busy, but it is my pleasure to help out. I don't charge for this, but I also won't give you a lot of time. If you need a lot of time, I will refer you to someone that can help you and go from there. But if you've got any questions related to these areas, please don't be shy. No need to struggle. So at this point, I guess Bradford or Roland, I will turn it back to you. And I think that's the shortest I've ever spent.
Thank you.
Thank you. Thank you, Mark.
Thank you.
Yeah, before we let Mark go, is there any question from Mark? I believe we disabled the capability of the attendees to raise their hands.
So what I saw something from, I can't read that too well. Is that Ophel from Calgary? Can she be unmuted or use chat?
Hold on.
I gotta figure out how to get to chat. Hello? Was there a question?
Hold on. Is there a question? I unmuted everyone. Is there a question?
It's under the, I saw it under chat.
I'm looking now, yeah.
Yeah, I can read it. Let's see. Oh, I think the chat was, it's not complete. I don't know what happened to the other chats.
Yeah, I don't see anything there that requires me to
that's
answer.
okay. I'll be the one to email you that, Mark, and then I'll copy
Excellent.
her. Yeah.
And don't be shy. Any questions,
right.
I'm happy to help out.
Yes.
Thank you.
Okay. So if there's no other questions for now to Mark, let's give Mark a big hand.
Thank you.
And on behalf of the core group, we just organized, Mark, and for everyone's information, we just organized a month ago a core group, which is called 2020 Year Picpa International Core Group for, I think, Zoom.
I think we can
US.
core group
webinar, right? Webinar, namely the people that are here mainly. Let's start with ladies first. Maria Curley, formerly from Picpa, Maine, now Picpa Las Vegas chapter. All right. And we have, of course, our coordinator, very energetic, Bradford Adkins. All right.
Hello, everyone.
Picpa Los Angeles chapter, and also Picpa California, San Francisco. We have also my idol Rene Bergonia, the coordinator for Picpa Tri-State chapter, namely Washington, D.C., Virginia, and Maryland. And we have also another idol of mine, that is idol Manny Felicio, founding president of Picpa Calgary chapter. And we have also past president of Picpa California, San Francisco, Rusty Bernardo. And we have also, I hope I did not forget, okay, of course, founding president of Picpa Silicon Valley, Ray Eugenio. Those people are the ones that are running all these shows starting this month of August. And without them, we cannot have this webinar in full force. So we are really lucky that we have these people who volunteered their time and services for the sake of our fellow accountants, worldwide, global, because they know that under this COVID season, pandemic, we still need to work with our clients and the economy of the world as a whole. Did you know that we are very lucky because our profession is, I'm biased, but our profession is the best profession in the world. But let me justify it. Okay. Number one, I'm not a pro-Trump person. However, if you remember the so-called third preference in order to get into a U.S. visa to the United States, that third preference visa was canceled many years back, sometime in the early part of the 70s. Most of you were not born yet. However, guess what? They are working on going back, reviving the third preference for professionals, including accountants. All right?
Very good news.
And guess what? The good news is this. That's why I said we are very lucky as accountants, because they do it by alphabet according to your profession. And guess what? We are number one in the list. Why? Because we are letter A. A's accountants. We are number one in the list of the professionals. Number two is AR, architect. We are still number one. Architects are only number two. So I'm telling you, without your knowledge, we are lucky to be accountants. We are very lucky to be accountants. You name it, even alphabetical, we are number one. That's why Mark is number one speaker. All right?